Jim, I want to pick it up on what you just mentioned prior to the break, which is that deflation is the real risk going forward. Why is that a real risk? What do we need to think about?
So humor me for one sec, Catherine, and let's go back to we come out of the 2008 financial crisis. We have extreme levels of debt. We hear about austerity. It was the Reinhardt Rogoff paper about austerity because once debt to GDP gets over 100%, we have slow economic growth. And then we overlay the digitization or the acceleration of innovation, which is also highly deflationary. And remember, we had a period of time where monetary policy was pushing on a string. We couldn't get inflation up to 2%. We couldn't get economic growth going. And, Mr. Trump gets into power and the Fed and the central bankers pivot because they get worried about the rise of populism. And Powell in 2020 has this famous speech at Jackson Hole, and the Fed implements this thing called average inflation targeting. And they go back and they say, you know what, inflation, we have not been able to get inflation above 2% since 1996. We would need to let it run hot. Okay, boom. We have COVID, right? Nothing has changed. In fact, what I would say to you is the amount of debt that has been put on the economy in Canada and the United States is equivalent to what we put on during World War II. So this is why
Yeah.
you go back to 1945. We had 3 years of 10 plus rates of inflation, but debt to GDP was 140%. So how do you get out of this? And this goes back to pre-COVID. How do we get out of this debt situation? Well, we either grow
Mm-hmm.
out of it, which means inflation has to be higher than interest rates, right? Financial repression, which is what happened after World War II. When Volcker got into power in 1975, debt to GDP was 35%, not 140%. And so we're of the view that, and I don't know why. People ask me why. I don't know why we get mischaracterized as this is the 1970s. It's the
Yeah, we do a lot. You're right.
1940s,
And I even refer to it
right?
that way. That's interesting.
And
Yep.
if you go back and look at history, like every action has an equal and opposite reaction. And if we follow going out of 50s, we had a massive deflationary scare coming out of in the early 1950s when unemployment was 2.5%, the lowest. Inflation was deflation. We went back to deflationary period. And what I am suggesting is that we're just going to follow the roadmap between 1945 and 1969. That's my non-consensus view.
Right. It is non-consensus. I really recognize that when I was reading your work. But I want to ask, are you also suggesting though that to reduce the debt, that the governments, excuse me, will deflate their way out of it? Is that what you're
That's our way
suggesting?
out, right? So if we use
Pardon?
19, so yes. So the big stumbling block that the market has to, so Thomas Sargent won the Nobel Prize in economics in 2010, and he countered Milton Friedman, who said inflation is everywhere and always a monetary phenomena. And Sargent said permanent inflation is everywhere and always a fiscal phenomenon.
Hmm.
We have spent on a relative basis as much money as we did during World War II, but we did it in 2 years. That is
Right.
inflationary. That has to stop. Once we get to go through the debt ceiling and fiscal policy gets back into line, money supply is growth is negative. We have a deflationary credit shock in the regional banking crisis. We've got AI and blockchain going to come in, provide significant deflation. And we've got debt to GDP. The interest rate on fiscal debt in the United States is now higher than the military budget. It's unsustainable.
Well, and on that note, I want to point out as well here in Canada, what's astounding to me is the interest payment on our debt, which is over $1 trillion. And when I always think of Canada, I don't use we don't really use $1 trillion numbers. We just don't. But our debt is above that, and the interest rate on it is about $45 billion a year. We collect about $43 billion a year in GST. So I have no problem paying taxes anytime I go buy something. But the fact that the GST can't go to schools, improving schools, education, improving our healthcare system, our infrastructure, and instead is going to interest payments and doesn't even quite cover it. Should it be astounding to every Canadian who cares about improving the quality of life? So we'll take a quick break. I'd love to get your response to that, but that's the interest payment here in Canada as well. Astounding. We'll take a quick break.